My name is Curtis Johnson, and I'm excited to have you on this short training. We're going to cover a little bit about what the process looks like to refer clients. If you feel like your clients would be well suited for some strategic tax planning, some tax elimination strategies, we're going to be talking to Michael Moffa, who is the CEO and founder of Prosperity Tax Advisors. But I've had the pleasure of working with Michael now for the last couple months. We've sent over many clients that have had great success in working with Michael and his team of tax professionals, attorneys, CPAs, forensic accountants, etc., and the amazing technology that they have that acts as a 1-2 punch to really be able to find some amazing strategies and bring them to clients. So, what we're going to do just really quickly, so you don't waste any time if you're wondering, do I have clients that are a good fit for this? Really, the kind of clients that PTA works with, Prosperity Tax Advisors, they're sitting with clients so in the year 2024, that client is projecting that they will pay over $50,000 in taxes, which, you'd be surprised. That's quite a few people that end up having that kind of we call it tax liability. And also that they are a business owner or, solopreneur, 1099 income of some kind. In other words, unfortunately, out there are not as many strategies as you would think that help W-2 employees save money on their taxes. So that kind of explains who this would be a good fit for as a prospective client. Now, Michael, walk through really what would be a good example of what you cover with a client on the educational side and really what you have to offer.
So a little bit of the background is typically most people have tax preparers, accounting team, CPA. So just like Curtis mentioned, what qualifies for our services really is just two items. One, a tax liability of $50,000 or higher. And the second thing is you've got to and must have your existing accounting team and CPA. That's it. Very two simple things. $50,000 tax liability, and you got to have an accounting team in place. Now, we don't replace that accounting team. We come in above the accounting team, coordinate with the existing accounting team to implement tax planning strategies and reduce your tax liability, less of a check cut to the IRS, right? All right, so we are Prosperity Tax Advisors. A little bit of as far as the background goes with me, how did I kind of get in the industry here? I got about 22 years of private wealth experience. I also own a private wealth management firm, as well as this tax planning firm. So coordinating the two, clients of mine were always business owners, typically 1099 self-employed, and then very seldom with W-2 salaries. So what I've noticed is that a lot of business owners were not getting tax planning advice. They were getting accounting advice. Accounting advice is what? Maybe you spent a little bit of money on a travel trip somewhere and your accountant is able to say, you know what, let's move that column into the business travel expense column, right? So that we can get a little bit of a deduction, right? That's accounting advice. What I'm talking about is tax planning advice, right? Planning proactively and implementing strategies in the current year, right? Now, the first and foremost, what makes us unique is our AI advanced software technology. It's amazing. Nobody has it yet, as far as I understand, across the 50 states. We have clients across the 50 states. But right now, we have advanced software technology that helps us scour the 70,000 pages of the IRS conduct, pulls in almost 1,500 strategies from a federal, state, and local level. Now, the 1,500 strategies, not all of them are going to be applicable to every business owner, right? We got to tailor it. We got to customize it to every business owner in particular. And that forms our executive committee. So what is that team made of? Well, we got this handsome gentleman right here on the left, myself, right? Again, coming in with 22 years of private wealth experience. Nick Turner here is our tax lead manager. He comes in with our 15 plus years of working with KPMG, which if any of you are familiar with the accounting firms, the top four, PwC, KPMG, Deloitte, Ernst & Young, right? So those are the top four. Mike Furdock is our tax compliant attorney. Now, again, everyone here, listen very carefully. Every strategy, every loophole that we do is legally and ethically bound by the IRS code itself, right? So that's where we have our attorney in here. Stephanie Vorig is our director of client accounting. She's also our forensic accountant and financial accounting, risk mitigation standpoint, and financial accounting standpoint. Jennifer is our bookkeeper, and the two ladies over here are account executives. So Again, uniqueness is our advanced AI software technology that pulls in every single loophole and strategy, combined with our extensive experience executive committee, forms our tax planning strategies for every single business owner throughout the year. One thing I always want to point out first and foremost is that the here, with a raise of hands, and I can't really see much, but I'm sure that they're here. Who here has gotten a thank you card, a hug, maybe a kiss from the IRS when they sent in that tax payment in tax filing time, right? Nobody, not even a hug. The IRS knows that 9 out of 10 business owners and self-employed overpay taxes. They know it. They're just, the US Department of Treasury is not going to come knocking on your door and telling you that you overpaid. Who does? Well, that's someone like myself that will help you fight them in regards to tax mitigation strategies that will also reduce that check going to the IRS. So what is the dilemma? People tend to feel like their accountants and CPAs are saving them money in taxes. Well, the truth is, with a raise of hands, again, who here is consulted with their accounting team and or CPA throughout the year, multiple meetings, and thoroughly planned for tax strategies that have to take implementation or action on throughout the year in order to receive a tax savings? And I ask that question all the time, and the very seldom will you see hands up, great. But for the most part, nobody, right? When do we have conversations with that accounting team? Right about now, right? February, March, taxes are due April, but then everybody files extensions and we kind of come back around in September and October. So tax planning is very, very vital, very, very important. And the problem is DPAs and accounting teams would love to do tax planning. They just truly would. They just don't have the time to do it because they're bogged down by the thousands of clients that they have doing tax preparation, tax work, right? And nor do they have the proper securities license in order to implement some of these advanced complex strategies that have very special tax provisions and save you money on taxes up front while creating generous wealth down the line. So I do, right? And that's hence I have the licenses behind me and the tax planning team and the executive committee in place. Every single year, folks, you need to do tax planning every year. Why? Because the loopholes have an expiration date on it. There are new loopholes that get passed through legislation, right? As it goes up to different chambers in Congress. Well, ones expire, right? Typically, CPAs, until they take their continuing education courses, then they're really not up to par on all the different strategies and loopholes that are out there. They're used to customized tax preparation and typical accounting advice like depreciation, stuff like that. The reason, one thing that I tell you right now, point this out, is what makes us very useful is that our AI technology is going to combat the AI technology from the IRS. So thanks to the American Rescue Act, $45 billion of the $80 billion that was positioned for the IRS, they now already have it, and they now already implemented AI technology on their side. What does that mean for you and every business owner and 1099 individual, every W-2 that's filing a return? Well, folks, in a matter of the IRS for the last decade and a half, they basically didn't have a department, right? They were understaffed. They were underutilized with technology. Now that has completely changed. They got multiple departments filled across the United States. AI technology now, and you could Google this, right? That's just kind of where I just took some of these clips from. They're able to scan your return in a matter of minutes. They're able to go back 3 years of your return in a matter of minutes. If you decide to take a very large travel expense one particular year because you were very aggressive with your write-downs, again, accounting advice from the CPA, but the previous years you did not, and then in your industry against your competitors, the average was far less. Well, now that's going to flag a question for them to come after you with, right? Just in a matter of minutes, folks. So we need to utilize strategic, legal, ethical strategies that need to be implemented to help offset some of the aggressive write-downs and deductions that a majority of business owners, including myself many, many, many years ago, have been involved in, right? So again, this is a great visual of what people think and assume their CPA is saving them in taxes. Just a very, very tip of the iceberg, right? But what you could save when you proactively plan for tax strategies throughout the year. So one of my mentors said this, and it made sense and it stuck with me. It's probably going to stick with you. He said the definition of planning is bringing the future into the current present. So being proactive, learning what strategies are available that are utilized, correctly fit for the business owner, how to strategically plan and implement that throughout the year, right? To receive the savings there. So I'm going to kind of get into what we do. What is it that we do that's kind of different or can work in coordination with your accounting team and CPA? Well, we start off with the first step is a tax analysis, right? So just like anything else, we, again, like on the wealth side, I do financial planning, right? So obviously we don't know what people say. We want to see documentation. So we're going to receive and request documentation after the first meeting. And what we're going to provide you is what's called our tax analysis. And what's included in that is a tax plan with recommendations in the current year, right? So we're in 24. The question I get asked is, when's the right time to do this? Well, earlier the better. We have done this, and Kim can attest to this, as well as Curtis. And we have a lot of clients come in towards the end of the year, and it gets a little crammed in, trying to make sure we get these strategies that are due before December 31st in order to be categorized in the tax year, right? So you're going to get a tax plan for 2024. Now I'm going to go in detail on these other bullet points here. Now this slide here is going to make people a little disappointed, a little sad, a little upset, a little nauseous, right? Now what this slide shows, we're going to show you visuals of what you overpaid the IRS in the previous years. And that's the page that people kind of get a little nauseous about, right? What they may get a little bit more nauseous about is what they're about to pay the IRS in 2024. So that's our job, right? So partnering with us, if for example, you're going to overpay the IRS by $83,000, we're going to show you a tax plan that can save you between $83,000 and less in tax savings, depending on which of the implementation strategies we were able to do, right? So we're going to show you past and present and future, right? So now we start 23, 24, and 25, right? In all our tax analysis. So we show you that. The other thing is pretty cool is that our unique advanced software technology, again, not replacing your current accounting team, right? You need them in place for the tax prep. We just do a second set of eyes or a second opinion over what strategies from the accounting side that they're implementing, not implementing, or don't even know that's available. And so just think of us as a secondary opinion, just with the advanced software technology, again, it's scanning through every single loophole and strategy available. Maybe your account forgot one of the 5 depreciation strategies, right? Well, we're going to notify that. And we're going to let you know what our challenge and concern is with your situation. If we have kids under the age of 18, why are we not hiring them in our businesses, right? And a lot of times you'll get from certain accounts, well, you got to pay them a certain amount. So otherwise the IRS will question it. The IRS will flag it. They don't know how to document and substantiate any of the strategies, which is why they don't do these things, right? Or don't do them effectively, okay? So that, again, that's another need of our specialty here. But anyway, we're going to overlook every single deduction that's available for you guys. This is where we really, really can shine as far as what our tax analysis is. Folks, there are different entities out there that allow you some asset protection from the front end of the spectrum, but also some significant tax saving strategies if implemented on the back side of it. But what we've come to find is that a lot of people are misdiagnosing their entities. In other words, they're making an X amount of money, but their entity is an LLC or an S Corp or a C Corp or a fractional C Corp, which most people never even heard of. So there are ways to restructure your entities to gather and claim the most ethical and efficient tax strategy and deductions out there. Now, CPAs are not familiar with this. Again, they would love to do it all day long. They don't have the time to sit down and itemize, well, if you got multiple departments in your business, well, how do we strategize out in that different entities to characterize and open up the door to different tax strategies, right? S Corporation has different tax strategies than an LLC or a Schedule C that's on your tax forms, right? But there's also restrictions that come with S corporations and C corporations, right? LLC opens the door to more of those lesser restrictions, but also different tax strategies that are applicable and available to the business owner. So we're going to merge and condense. We're going to take a look at every entity that you currently have and how can we propose solutions for you to increase your tax savings. We're also going to look at every single retirement and tax analysis available strategy out there. There's 80 of them, 80 different. Now, this is where the accountants are not familiar with. This is my neck of the woods. This is where I, the last 22 years, specialize in. So I bring the value coming to the retirement side. There are many, many strategies that have special IRS provisions that not only will help generate generational wealth down the line for you, if done appropriately and documented and substantiated correctly, at the same time get a very nice and hefty tax deduction up front because they're not familiar with it and their accounting team's not familiar with it. And some strategies do require cash flow, right? Just like anything else. There are strategies that are built into the IRS conduct that don't require any out-of-pocket cash flow, and then some do, right? And the other part of the tax analysis we're looking at is the insurance and asset protection side. Now, this is my favorite section as well. For everybody here on the call, and again, I don't know what states you guys are in, but every state has a particular statute for asset protection, right? One of the things that I kind of provide everybody complimentary, if you're married or have a spouse, then if you notice that the titleship of your accounts, your personal accounts, your money, your checking, your savings accounts, if you're partnered up with someone and it's titled joint with survivorship, which typically is the default if you're married or have a spouse or a partner. But notice in a situation where there's a lawsuit, maybe no one has gotten into a lawsuit yet, and good, but sometimes something's going to happen, a civil litigation or any type of litigation, lawsuit, car accident, whatever the case may be, they can come after that joint account, come after the entire account. Now, depending on what state you're in, this doesn't cost you nothing. Go to your bank and tell them that you want to change the joint title of your personal accounts to tenants by entirety, TBE. What does that do? Well, that separates the account from jointly held to 50-50. It still works the exact same way as a jointly held account, right? Husband, spouse, partner, they could go in, they could still, everybody gets access to the account, right? And such, they could access checking, right? Everything's the same, except for when this litigation, lawsuit, or car accident, or anything that comes after you, they could only come after 50% of that account. You now just protected half of that account. It didn't cost you nothing. So that's some of the things with my experience and the designations I've had for the last 22 years and working with attorneys for the last 22 years, right? This is very basic asset protection strategy. Now, that's not going to save you any money on taxes, but that's going to help save you money in a lawsuit, right? Or any litigation. So keep that in mind. But we will look at all the different statutes in each of the different states. We have clients, again, across the 50 different states. And we're going to find out which of these, what is your situation? And we're going to make sure we put you in the best tax position, right? One thing I always want to point out, this is very, very important, very, very transparent, is every single loophole, every single strategy that we recommend is legally and ethically approved by the IRC code itself. You will always see a IRC code attached to every single strategy that we have. Now, you could take that strategy, that IRC code, and you could go Google it, and it won't tell you what the strategy is. It will explain the strategy over hundreds of pages, if not thousands of pages, right? But it's in there. As you can see, there are different links based on every court case the IRS has in tax court. So every time there's a new case that comes out, they either update the existing revenue IRC code with additional revenues and subsets later on. So obviously the length of that sentence there I've seen it to be almost 4 lines deep. So, but anyway, we just want to show you that everything that we show you and represent to you, it's not in the gray areas. Everything is legal. Everything is compliant. Everything is ethical. Is just if it fits your business. Some people try strategies that don't fit their business, and it's very hard for them to document it and substantiate it. That's where they get in trouble. It's when the IRS comes knocking on the door. They're going to come knocking regardless, folks. And I just want to stand here and tell you now real quick that if your accountant is telling you don't do that because the IRS will flag it, is incomplete and miscommunicative to you guys. Because if it's the right strategy and it's the right approach and it's got the right documentation and the right substantiation behind it, it works. It's all available for every single business owner in 1099. So just keep that in mind, right? So again, why don't accounting teams and CPAs really, again, do tax planning? Well, there are certain deadlines that need to be met throughout the year. They don't have the time to do it, right? And so from a legal entity structure to different strategies throughout the year, right? There are deadlines in the beginning part of the year, the middle, and the last part of the year. So if they're doing tax preparation, they're bogged down for the first 6 months of the year. Well, you missed out on a bunch of strategies that need to be implemented in the first part of the year. Then there's the other half of the year that needs to be implemented as well. Now, there's some rules where you can kind of slide into different months to get stuff done. But otherwise, there are hard deadlines that need to be implemented by. If not, we'll try it next year. So again, what makes us even more important? We do this day in, day out, every single day for the entire year. And by the way, the communication with us is obviously quarterly, by default. But if you have questions, obviously we're here to respond and answer them. So moving close, I'm almost done. Another thing is that why we don't replace your accounting team is because our accountants communicate with your accountants. And if we do the implementation of the strategies, well, we're gonna communicate with your accounting team and tell them exactly where to put the line item expense, how to document it, how to put the tax savings on what IRS form, right? We make it so easy for them to do the tax prep return. There should be no questions about it. One last thing before I end this. If we're business owners here on the line, right? And so I'm assuming that at some point, some of us, or the way that we're incorporated in our entity, we got to pay ourselves a salary, right? And again, with a raise of hands, who here pays themselves a high salary because their accountant told them to, without any justification behind that? Meaning, they pay you, they recommend, accountants and CPAs recommend a high salary just to bypass the IRS oversight. In other words, if you don't pay yourself a reasonable wage, the IRS will question that, right? And if it's not properly documented and substantiated, well, the IRS is going to force you to increase your salary and potentially pay penalties and stuff, right? So from an accounting standpoint, they just tell you to pay yourself a large amount, right? And so that the IRS won't say anything because you're paying all that payroll tax. Let me give you an example of a doctor that we helped out. They paid themselves $300,000 in a salary, $300,000. We ran through this report, which we include complimentary in our tax analysis. The salary came back at $92,000 with 11 pages of documentation and substantiation, right? We saved them almost $14,000 in tax savings by reducing their salary from $300,000 to $92,000, took the difference, and of course, that's going to be taxed at a higher rate than payroll tax, right? But we now open the door to additional tax strategies that we could attack that money versus it all being in a W-2 salary, which you can't attack. Right. So again, thinking strategically, innovative, out of the box is what we do. And again, $13,000, $14,000 in tax savings, which is less of a check cut to the IRS just by changing their reasonable compensation wage. So again, something that we do all day, every day throughout the entire year. Last but not least, this is a calendar of implementation, right? So we kind of show you, when things are kind of due, give you an idea of what the tax savings would be for that specific strategy, right? Of course, a family business strategy, a specialty tax strategy. Well, what are the deadlines? And so we'll kind of put this together for you so you have a visual, again, of what this looks like throughout the year. It's something that you guys want to do. So that's pretty much it in a nutshell. Questions, comments, concerns?
We'll do questions in a minute for everyone, but let's cover a couple other points here because, again, this is designed for anyone who's looking at doing referrals themselves. I laid out a couple points that I want to make sure we cover. Kim, since we actually have you on here, you've already sent clients through this process. Two main questions that I would really ask. One, what was that client experience like? How much did they save? And then two, has this had any impact on the kind of clients you've been able to go to since then?
Sure. So the first one, the client experience was phenomenal. I met Mike at the perfect time. I had a high net worth client who was making, I believe, around 9-10 million, somewhere in there a year, and was desperately looking for a tax planning firm. I asked every wealthy person that I knew, and I know a fair amount, and pretty much every single one of them didn't have someone. And so I realized there was an incredible market opportunity here, but I still didn't have a solution. So then Mike came into the picture and I linked him up with this client. It was tremendously smooth. Our first call went phenomenal and the client signed up for the analysis on the spot. And then from there was a series of meetings where there was data collection from the client, getting his tax returns. And then Mike's team reviewed everything and came forward with a very professional proposal of what needed to be done and executed to save this client money. So obviously with I forget the amount, $8 to $10 million income in that year, that was a 7-figure tax bill. He had a $2.6 million tax bill. He was going to have a liability of $2.7 million. Through working with PTA, that essentially became nothing, right? He ended up, through implementing a series of strategies, was not going to have to write any money to the IRS, but in fact was going to get a refund on his quarterly, okay? So needless to say, my client was thrilled. He has already given me other ideas of people that should go with Mike. And I've sent over a few other prospects since then. Every single one has either signed up or has a couple more questions, but we're looking at saving them a tremendous amount of money. Okay. So I would say it was very smooth, very easy. I also got a 6-figure check for referring this prospect in, which was a great day. That I was not mad about. And then as far as opening up a new market, I've worked in insurance sales for 10 years now, and I have a magnitude of customers, existing customers, that I'm able to go back to, who I know what their financials are. I know how much they contribute to their insurance policies every year. And so I've gone through and started linking them up with Mike. So I'm looking forward to that greatly. And then it's also opened up people that I never closed on a product. Like I managed to not close them. Now I'm able to come to them with a different product that is different than selling an insurance policy, right? People may not believe in insurance or the various things that they say, but most people don't believe in paying taxes if they can avoid it legally, right? So for those people that I failed close, I'm able to go back to them, bring them to Mike, and potentially reopen that up for more insurance business as well, which is great. And then just people that I've never had the right connection to be able to go in and sit down on the insurance front. It's a little bit easier for me to just in conversation at a party mention it, and people are just chomping at the bit. So hope that answered both of your questions.
Yeah, that was perfect. Thanks, Kim. And the last couple things that I want to cover for everyone here. One of the big things everyone is going to ask, because Kim also led into it perfectly, is on the compensation side. So obviously, just like pretty much any organization, compensation is it's on more of a sliding scale. So you might start out at, call it in the 2.5% range of savings, but then as volume grows or as you go through the process, become much more familiar, that's where you can get up into the 5% range. I think the top contract's in the 5.15% range. So there's a lot there to be made. So in Kim's example, that 6-figure compensation commission is due to saving that client millions. So there's definitely there's a great potential for making, a good income there. But the main point there also that I want everyone to think with is that we are talking also about the ability to free up cash flow as a result. In most cases, if they had to pay $2.6 million to the IRS and all of a sudden some of these strategies make it so they don't, you also then are seeing an available cash flow that they otherwise didn't have. So things like that could lead well to other business. Like Kim mentioned, she was in the insurance business, but other people might be in the real estate industry, and they, have clients who might have gone after a bigger house if they had the right taxes. Because obviously, in that case, they don't want it to all go away because they need to qualify for a house, but they still don't want to pay in excess of taxes. So if you're able to help them hone into that sweet spot, you're able to add greater value. And of course, in this case, I'm sure many of the people who are hearing this have a tax liability projected for themselves in the year that's going to exceed that 50K mark. And this is a smart strategy for you to apply, of course, as well. So those are some of the important points. One last thing that I want to bring up, and I'm keeping Mike up here just for his good looks, but this last point I'll cover for everyone here. In terms of expectations, we expect a very active role in terms of a referral. PTA really would like someone to be on that initial call so that they can make sure there's a warm introduction between the client and someone on Mike's team. Depending on the relationship you have, it might be more logical for you to step off mid that call so that, you're obviously talking about personal finances. So if the relationship isn't such that you already know that client's finances, obviously then it would be intelligent for you to hop off. But by being on there on that call, you're able to help guide it in the right direction. Kim, I see you raising your hand there. Do you want to add more to that?
I do. So obviously, first call absolutely must be on there. You have the trust potentially with that person, or you're sort of the link. You want to make sure they actually show up to the meeting, right? You can chase them up, reconfirm them, you're a part of that. I got permission from my client beforehand to be on the call once we were getting into the nitty-gritty financial details. One thing I will recommend, obviously you can't necessarily sit on every single call and every single appointment, but when it comes to the point where Mike or his team is coming in to pitch the big deal, right? These are the strategies you should implement. This is our fee. I would highly recommend being on that call because your client in theory should trust you. And I'll tell you with my big CPA client. Mike has the credibility, he has the tax knowledge, right? But my client trusts me implicitly. So when Mike went over the proposal, it was a combination. Mike helped close it a lot. He had the goods, but the client called me afterwards and said, hey, should I do this? And so I had to go through it with him and answer questions. And he was ultimately asking me, should I do it or not? Right. So I felt like I needed to have that knowledge to be able to, in good conscience, say yes or no. Right. So I would be as involved as you can be. It's also probably the best thing you can do in any sort of sales situation is control it as best as you can at all points. So I would be as involved as you can be if you want to get a great end result. That's my one tip.
Curtis,
That's awesome.
Do you want me to go into pricing, or is that something at another time?
It's so funny. I was just thinking about it. We should obviously cover that. These are referral reps. They should probably know what's being charged.
Okay, good. So the first thing is, it's a two-step process with every single client. The first step is tax analysis, what I kind of went through. So the first part of the tax analysis, because of the partnership, right, we are charging $1,500. That is negligible in the eyes of a business owner to get that much information up front. $1,500 gets you everything I went through: analysis, challenges and concerns of your situation that we identified. Obviously the documentation we need ahead of time is the data we're going off of, P&L. And because I have almost a 3-decade forensic accountant, I can tell you now that 92% of every P&L, profit and loss statement, balance sheet from every single business owner is not done correctly. But that's not our job, is to fix their accounting work, right? We're just to go off of the data that they have. In the end, my job, my focus is to reduce your tax position legally and ethically as much as we can based on the applicable strategies that are available for that business owner, right? That's my focus first and foremost. The accounting we do, but we can do that as a separate service. But anyway, $1,500 from our tax investment. Listen, I'm going to be honest with you. We're not in the job of making money off of $1,500, right? I mean, it's a stepstone into the third meeting, right? So of course, there's 3 meetings for that tax analysis. The first one is the introduction, what we do, then we collect payment. Then we book 2 meetings, typically 7 days apart after the second one. The second meeting is the questionnaire. This is where our account executives request documentation in our encrypted portal, right? So you upload your tax returns, your P&Ls, your mortgage settlement statements if you're selling properties or investment properties, everything that we require, retirement accounts and such. Then we analyze that information and we come up with questions for a second meeting, right? And then we have that meeting. Typically 20 to 30 minutes is the length of that one. Then we go back and do what we are supposed to do and what we really shine at, right? It's coming up with your tax analysis. And so 10 days between second and third meeting, we deliver this tax analysis delivery to you. Now, I get questioned all the time, like, well, I give you the recommendations. I give you the solutions. 2 choices you can make here, right? One, you can go and have your accounting team do it, which, by the way, you wouldn't have accepted and taken my call in the beginning if they were already doing it. 2, not every CPA is going to do these tax strategies because they don't know how to document and substantiate it correctly, legally and ethically. So they're not going to do it because they don't know how to do it for the most part. Or you could hire us to do the implementation, to do the documentation, to do the substantiation, and we audit protect our strategies. Well, what does that mean? Audit protect. Well, if one of our strategies gets questioned by the IRS, we will answer and respond for you. If it tends to go down a road and we have to appeal or whatever the case, we incur those charges and those costs. So again, we protect our strategies because we know how to do them. We know what works and what passes the IRS every single time. They are legal and ethical strategies available to every single business owner that's out there. You just have to be the right fit. And so that's where our customization comes in, right? From our executive committee. But anyway, the implementation costs for us to do all those things, implement, document, substantiate, audit, protect, we charge 40% of tax savings, right? Under $500,000 in tax liability. Well, some people might say, whoa, 40% on this is, let's use $100,000 example, right? So we would charge 40 grand, right? And maybe with a discount rate if you do the lump sum up front. But someone's like, whoa, that's a lot of money. I'm sorry, but you just spent $100,000 to the IRS last year and you didn't get nothing back. Here, you're going to get roughly $60,000 back in your pocket to, again, free up cash flow, reinvest in your business, hire a new employee, reinvest in your wealth to generate more wealth down the line, right? You free up more cash flow and cash reserves. So either you could pay the same $100K to the IRS like you did last last year and you'll continue to do this year and probably even more next year, that's fine with us. But if you want to save money and you want to do it the right way, the ethical way, the legal way, and with AI advanced technology at our side, then that's why we charge 40% of tax on the implementation side here in this meeting. And then thereafter is about 4 or 5 different meetings throughout the rest of the year. So we can stay in contact with you because there are strategies that need to be done. There are tax attorneys, trust attorneys, other types of CPAs that need to be involved besides our team to implement, depending on, again, your tax liability scenario. For Kim's case, $2.6 million in tax savings, we had to get a collection of resources together. And imagine doing that in November with the holidays right around the corner. So it was like crunch time between all these attorneys, our team to get together. So just depending on where you are with the tax liability, but those are the fees. $1,500 up front for the first part gets you access to our knowledge, our resources, our recommendations. And then thereafter, we almost 80% or higher are going to close on the implementation side. And it just makes sense that if we're the ones coming up with the strategies, we're the ones that have the proper documentation, the proper substantiation. Again, 2 pieces the IRS needs to qualify any loophole, any strategy, and be okay with that. What better to do it than the ones that recommend it, right? Again, if your accounting team was doing this for you, you wouldn't need us, right? Because they should be doing it all. So, and I'll end with that.
Perfect. Yeah, Kim, go ahead.
Yeah, I wanted to clarify this one point because I found just from talking to prospective clients on this fee aspect, which I wouldn't recommend necessarily bringing up the 40% fee unless you feel really confident at being able to explain it. Whoever does your appointment will explain that and break it down for you on your behalf. But one thing that I have found with prospects is when I say 40%, they automatically balk at that and they freak out, like Mike just said. But what you have to understand is it's whatever PTA, prosperity tax, is substantiating and handling themselves. So if a client already has all their travel expenses, their business deductions, it's not 40% of that, right? It's not 40% of whatever. It's what after your CPA does their bit and they go in and find all your deductions. You contributed to a 401k or an IRA. After all that stuff is done, it's just what PTA is recommending and substantiating. So it's a check you would have written to the IRS anyway. And so once I've clarified that point, then the prospect goes, oh, duh, that makes sense, right? So I've had several people where I've had to explain that and break that down a bit better. So I would recommend before you get into that 40%, make sure you yourself understand that very clearly, what PTA is actually going to be charging that 40% on.
Yeah, and Kim, you said it correctly. You don't have to even cover it because it's going to get covered in the appointment by their team, who obviously knows how to handle all that very well.
Yeah.
Yeah.
Go ahead, Mike. Sorry, I cut you off.
We just want to notify everybody here just what the fees are. And again, it's 40% of something that you never had access to, right? So you paid 100% to the IRS. If it's 50,000, we charge 20,000, you get to keep 30,000 in your pocket and generate more wealth down the line or free up the cash flow. But this is sort of in a case study, it's sort of what we provide. So I want to kind of give you a case study of what it looks like, kind of. Of course, it's in a more visual presentation. But again, going through the 3 areas. So this is a roofing contractor that came in July of last year. They do about $3 million. Now, folks, it's not the revenue that we're looking for qualification. So I just want to be clear on that. It's a tax liability. I've seen many people that have 20 million in revenue. When it gets down to their profit, it's like 100,000, right? So that means they're writing off everything under the sun. Very aggressive. I don't know if they're going to do that this year with AI moving forward with the IRS, but listen, that's not my place to say anything yet, but it's tax liability. So again, we want to look at tax liability. What did they pay the previous year based on the profit they get? So very easy question. They could find it on line 24 of their 1040 form. And you could look for yours as well, right? Everybody here on the 1040 form last year, just look at line 24 and you'll see what you paid in total tax liability. Anyway, again, what we do with the tax analysis, right? We assess your concerns and challenges. We want to propose them to you. We want to notify you. So this particular contractor didn't really know about an employee reimbursement plan. They never created it. They just weren't aware of it. And your accounting team wasn't either. Salary. This is the report that we give, complimentary, right? We noticed that most business owners were saving them that or overpaying themselves by 25,000, right? 25,000 too much. Plus health insurance. They never optimized health insurance for tax purposes. And of course, the savings that they had left over at the end of everything, they never optimized that for tax purposes as well. So again, when you look at the metrics, 3.1 million, but they see again, as an example here. Now in the construction industry, if you're getting profit margins around 10 to 12%, you're in the norm, right? You're doing something amazing. Anything higher than that, well, there's something's not right. But 10 to 12% is the average norm from construction industry, right? For profit. So he had a tax liability of 107,000. We proposed 4 strategies, right? Saved them $32,000, right? And so again, instead of paying 107 to the IRS, they were going to pay 75,000. But what did we recommend, right? And so we kind of come down here. And again, I told you, our strategies are identified by the IRC codes themselves, right? So we provided 4 strategies here. This one here is a reimbursement plan, again, that the company did not know or wasn't aware of. So once we implemented that and put it in place, to save them almost $5,000 in tax savings. The plan here was overpaying themselves compensation. Again, just $25,000 higher than what your reasonable compensation wage should be. Save them $5,500 in tax savings, right? Reducing their salaries to the appropriate level based on their state, city, zip code, and industry that they're in. And by the way, you're all business owners here as reps, right? 1099s, you're your own business owners. You're wearing multiple hats. So you should pay yourself as if you're wearing multiple hats. You're the CEO, you're the HR person, you're the finance, account, and bookkeeping. You're doing advertising, marketing, sales. You're wearing all these hats. You should respectably be paid by all these different departments that you're associated with, right? One person doing them all. Now, you may have other people, if you're large enough, and you'll have staff, but you're still looking at the numbers. You're still looking at your revenues, what your commissions are, what your tax expenses are, right? You should be paying yourself accordingly and appropriately. Again, accountants don't know how to do this section here because they just say, you know what, pay yourself way more than what someone in your sales position would do, and then avoids the IRS. Well, you're paying more in tax unnecessary, right? This one here is a reimbursement from a health insurance plan, right? According to the IRC code. You know, not a lot, but still $2,700 in tax savings. That's less of a check cut to the IRS. And this one down here is an investment related with special provisions in the IRC code to reduce your tax liability. This saved them $19,000 in tax savings. So collectively, 4 strategies, $32,000. We recommended 9 strategies and reduced their tax liability by $105,000. So that's 4 for 32. We recommended 5 additional, and then they cut a check to the IRS for $2K. And that's kind of it in a nutshell as far as the case study goes with that. So again, folks, it's the tax analysis is the first step, right? We got to analyze your situation, you personally or your clients that are business owners you think that they would qualify for. You know, if you're a 1099 making 2, 3, again, just everybody here when they go home, take a look at your 1040 return for 2022. I know nobody's ready for 2023 yet, and most of you will probably take the extension like I usually do. But that in case, look at line 24. It'll tell you total tax paid in, and then you'll know if it's 27,000. You know, obviously our minimum here is 50,000. You know, and that just makes sense. But through the reps, there may be something where we can work with you, even if it's $30,000 tax liability. We can save you that amount or more. So, you know, but for your clients and yourself, $50,000 limit. So, all right, Curtis, I'll turn it back over to you.
Thanks, Mike. Appreciate it. And I think this gives any prospective rep a very good idea of what this process looks like. And again, long and the short of it is, if you have clients who are affluent or you think would like to pay less in taxes, this is a great addition to what your core focus might be. Maybe you're P&C, maybe you're in life insurance, or you're a financial advisor. And also another thing, this is something of note, we were already talking about this, but if you already are in the wealth management space or you are in the life insurance investment space, yeah, go ahead, Mike.
Sorry to cut you off there. Folks, right, if you are in that case, just keep in mind, because I own a private wealth firm, I'm not here to poach anybody's clients. I just want to make that a stand up for. What I can actually do is, 1, make you look like a rock star in front of your clients, and 2, open up additional assets that you weren't able to get or manage if you're on a security side basis, and like I did, you know, for Kim here. So, you know, it's just keep that in mind, that this is tax planning. We're coming in with tax planning. You know, the way you would, and I guess Curtis could you know, follow up with additional training on it, but you would refer to us as an advanced or strategic tax planning firm using AI technology with an extensive use of an executive committee to hone in on the strategies, right? That's how we get across. There's nobody doing what we do unless you're paying them millions of dollars, you know, for a KPMG or a PwC at that level, right? I mean, yeah. So, but keep that in mind. I'm not here to poach anybody's clients. I have no intention of doing it. I would actually refer you you know, if we had to open up a business account or an investment account or sell an insurance policy, part of a charitable remainder trust strategy or something like that, then I'll refer it to you guys and open and put you on a basis to sell insurance and make an additional commission on that too. So just keep that in mind.
Perfect. You took the words right out of my mouth, and I think for a lot of people that's going to be an important piece. Yeah, and even for CPAs out there, think of how much better it would be if you're bringing this team in place to add further value to your existing clients. They're going to see it as a big plus versus maybe someone coming in and introing it to your clients around you. So even for CPAs, this is a great strategy to provide that extra value to your existing clients. So again, I don't want to, we won't dive into every last little minutia here, but we'll cover in other videos how to get rolling with PTA or how to get started on the process and how to refer clients. But for the sake of this one, we covered a lot to really educate you on what this is as a service and who it would be a good fit for and how you could see yourself fitting within this process, and how you can also use it to build your book of business if you're on the asset side or on the life insurance side. So very valuable on that side. Mike, thank you so much for taking the time. Kim, also thank you for chiming in on everything. And we will catch everyone in another training where we cover a lot more on how this whole process works. So thank you so much for taking the time to watch this, and we'll see you in the next one.